Good morning, good afternoon, good night, wherever you're tuned in from. Whether you're watching here live or you're watching later, these streams are meant to break down the strategies, TA concepts, the data, give you an easily understandable way to break down these concepts and strategies so you know how to navigate these markets so they don't navigate the money out of your portfolios. My name's Kellam. Welcome to the BitLab Academy daily stream. I hope y'all had a wonderful weekend, rested, recharged, and if not, I hope I can recharge you here. This community is all about empowerment and growth and love and strategy and concept, and I'm not just going to do TA and throw TA at you. Every stream, I try to break down a slightly different concept of what I'm doing within these things, so you can understand what's going on when you're watching, whether it's this channel or any other channel, so we can help bring those beginners along. So this is all about bridging that gap from beginner to pro. So with that being said, how is everybody doing? How are you feeling? If you haven't yet, we got about 50 people watching already. We just started. Hit that like button, get it going, pump that like button up. It really helps with the YouTube algorithm. Let's YouTube know you're interested in this crypto content, and it helps build the crypto ecosystem. But so it's not just floating my ego by you hitting the like button. It really does help drive the industry forward. And it's not just this channel, it's any channel that you're watching. You find yourself there for 10 minutes or even 3 minutes or 5 minutes. Even if you feel like you don't like the person for whatever reason, you're still there watching. So that means you're engaging with that content. So go ahead, hit that like button, hit that subscribe button, ding that bell. And I want to say, make sure you head over to the BitLab Academy Twitter page, which is this one right here. It looks just like this, and it's at Academy BitLab. Make sure you're following the correct one, and come and retweet this daily tweet. This is a tweet from today. We do a drawing every Friday. We randomly pick the days of the week, and then we randomly pick a name from those who retweeted and follow, subscribe to BitLab Academy. So come and be a part of this. We're giving away a lot of great stuff, and also, if you haven't yet, make sure you head over to the BitLab Academy page. If you're here, you're probably watching it. You might be watching live on the 24/7 network as well. But come down. We did this stream on Saturday. Bitcoin driving higher, adoption exploding, while banks seem to be systematically starting to, the rugs starting to be pulled over, up from being over people's eyes, and people are starting to understand. Really great content in this stream here. This is an interview with Jordan Lindsay. So come and give this a watch. And also, just wanted to point out, there's, you can go ahead and retweet Saturday's tweet as well to, just bolster your chances of winning. Every day that you retweet, you get entered to win. So I just want to shout out everybody in chat. How are you feeling? Are you excited about what's going on right now? Are you sitting on the sidelines? Did you DCA over the weekend? Did you just spend time with family? Because we got to remember, it's not all about crypto all the time. Of course, that's the direction the world's going in terms of blockchain development, advancements, innovation, adoption. But we can't be blinded by the potential profits. We can't be blinded by what's happening in price action every day, every minute of every day. Of course, we need to be aware of it. But this brings up an incredibly important point that I hope we all remember, and how important life balance is. This weekend was a great example. Whether you celebrate Easter or not, it was a weekend. It doesn't matter what your religious beliefs are. This is completely open channel in terms of wherever you are, whoever you are, whatever you believe. But what I think all of us can collectively believe is family and friends and life balance is important. Having sunshine on your face, important. And in fact, to be a successful trader, to be a successful investor, if you don't have life balance, then you're going to end up falling prey to your emotions. You're going to end up falling prey to seeing setups that aren't there because you need something to happen rather than letting them develop. And if you establish a schedule, or at least a framework, a set of rules that work for you, for your strategy, for your timeline, for your time horizon, for your risk exposure, for your experience level, and what you're doing and how you're doing it, then if you don't do those things, then you are going to be held hostage by emotional trading. And emotional trading is the #1 thief of profit. So with that being said, no matter what you did this weekend, I hope you spent some time away from the computer, excuse me, away from crypto YouTube, away from TV, just doing something that empowers your heart and empowers your spirit. So I just wanted to start off with that. We got some great charts that we're going to be going over today. Coming back onto my screen here. Of course, again, remember, come retweet these promo tweets from Saturday and from today. Again, if you haven't yet, come and watch here on the youtube.com/@BitLab Academy. We just broke, happy hallelujah, we just broke 6,000 followers in just about 3 months. We're coming up on our 100th video. So I want to say special love, appreciation, shout out to everybody here in chat, all the mods, Alexander G, Alex Green, my main man, Mr. Matt C, dear friend, a mellow fellow, Crimson Caravan Company, Total Clinic Solutions, Mike Volmer, unforgettable name. Also, thank you for the contributions you're also doing with some of the stuff for this BitLab rollout, which, man, I know we've been talking about it for a long time, but it has been a monumental undertaking. We're right on that edge. King Peasant, we got a lot of people in here. So we got 83 people, 35 likes. Let's get those likes up. Hit that like button. I'm waking up early every day to do these streams for you guys, to just spend that extra quarter of a millisecond, quadruple touch that like button, drop an elbow on the like button. All right, so we got a lot of stuff we're going over today. Let's just kind of zoom through it real quick, and then we'll cover what the things are. We're going to be going over this chart. We're going to be going over some adoption stuff. What's going on, global liquidity in China, and how that relates to what's going on in the U.S. economy. Is it starting to switch in terms of what's having a larger impact on what's going on with prices? We're going to go over a couple, some stuff on divergences, a little bit of a lesson there, reminder. Huge news going on this week. Just a little bit more about what some of that economic data means. We've got a lot of stuff going on. Wallets over 10,000. Wallets with balances over 10,000 Bitcoin starting to trickle up. Could this be a good sign? We've got a lot of stuff going on in the markets, charts. So let's just go ahead, and first, I got to scroll through, and I want to mods, all the mods that are here, I want to say thank you all for all your help through all this. We have a Discord just for everybody that's watching. We have a private Discord. That's why I have an earphone in. That way, if there's an error with audio, visual, or if there's important questions that you're all asking, or again, if you all super chat, by the way, anybody that super chats, it's such a huge help to this channel because it's not just me. We have a whole team at the Hit Network. And so I do appreciate that. Any super chats, they send me a private DM here on Discord, so it dings in my ear in case I don't see it, because I got like 5 screens here. In case I don't see it, I want to make sure any key questions or super chats, I want to make sure that we answer that. So I also want to engage in this stream specifically a bit more with chat, and I want you all to participate in this show today. I want you to put some, if you've had a sticking point, or if you've had something that you just can't understand, or maybe I've talked about it a lot on the show, but it's just not broken down, throw in hashtag sticking point or hashtag BitLab question, something that just signifies there's something that it's a special focus, not what's Arbitrum going to do. Don't do something so narrow. I want you to think more constructively about what knowledge it is that you want, and what the crux of your issue is, or the concept, or whatever it is. I want this stream is meant, as I said, to bridge that gap from beginner to pro. And if you all engage with me here in the chat, with each other, in the comments below, let me know what you're struggling with. If there's not is this a good balance of my portfolio? Because I break all that kind of stuff down regularly. I want you to ask something that is some conceptual issue that you're having trouble grasping within the crypto trading, investing markets, or even strategy, whatever it is. And I will be paying attention to the both the chat and the Discord here in case I miss a question. And we're gonna spend some time at that at the end. And we're gonna be doing a bunch of TA on a bunch of assets, but we got some key data that we're gonna be going over. So again, we got 102 people watching, 51 likes. Only half of you are showing some love and appreciation. Hit that like button, ding that bell. All right, so let's go ahead and dive into it. What are we talking about today? Bitcoin breaking away from stocks. Huge week for crypto. What does this mean, and how is it important? Why do we care about stocks? Well, we've talked about this a lot on the stream. crypto and Bitcoin, let's separate the two. Bitcoin specifically has grown into having a very strong correlation with certain risk assets within the stock market, and sometimes in general the stock market as a whole. But the correlation is loose at best. There's times when there's a very strong correlation, meaning they're trading together directionally, and there's been other times that it's broken away. So right now, and I'm going to show you some charts and data that kind of show this. How do we contend with this as a trader? Because one of the things that we want to do when we're trading, when we're investing, is we of course want to pay attention. Of course, we want to pay attention to what's going on with the particular assets that we're investing in. Say it's Bitcoin, say it's Cardano, say it's Ethereum. Maybe it's all three. Maybe it doesn't matter. To have any edge in your trading strategy, you cannot look only at the data of that asset. Of course, technical analysis is a phenomenal, it's a phenomenal tool within your basket. It needs to be one of the tools within your basket of tools for which how you're engaging and interacting with the markets. I need to switch this to my headphone because it just dinged on. There we go. We need to utilize, and everybody's going to be different depending on your strategy. From utilizing technical analysis as a larger portion of your strategy. Some people will also use some fundamental data. Some people primarily will only use fundamental data with just like a trigger within technical analysis, meaning, okay, we see a bear market. They may not be doing this on their charts. You know, this is on the 1 hour time frame. They may not be doing, okay, we have a channel, we broke out. Okay, we broke out to the upside. Now we have a falling wedge. It's going to break out to the upside, but now we have a rounding. Everybody has a different time availability to sit at a desk like I do. You know, I can be here 60, 80 hours a week because this is what I do for a living. But other people, most people have other jobs. They have kids, they have families. They may be chasing the international basket weaving competition or the supreme taco maker. Everybody has different things on their plate. So everybody has a different strategy. And I want you to pay attention when I share strategies that I utilize. This is only meant for each one of you to sort of cherry pick which things you're going to focus on and really master that, and then draw on a new strategy. See what works for you, and it could be from here at BitLab Academy. It could be Frankie Candles, could be Investor Bros, could be Jason Casper, could be Crypto Face, could be, I mean, name the trader, Garrett Soloway. Each one of those people has a completely different set of circumstances that informs their ability to look at the charts and make calls, but also capital that they're using, but also, as I said, the experience that they're drawing from. But in addition to that, they're just intrinsic knowledge of other things. They may not need to go and focus on what's going on with CPI and this and that, because it may already kind of be built into their environment where they're aware of it. Whereas somebody that is living in Ohio and is a physical education teacher and they want to invest in crypto, it may take a little bit more work for you to, and this isn't a bad thing, this is a good thing, because we need to be aware of ourselves and our limitations and our circumstances. But it may take that person a little more time or effort to be like, okay, what is going on with CPI data this week? And what the hell is CPI data? Well, as we've seen since, I mean, it's been in play, of course, since before Bitcoin was even around, but economic factors, monetary policy has been the narrative sort of driver for where markets are going to go over this last, I mean, I would say probably about 8 to 12 months. It's been had a huge impact because we had inflation kind of go out of control. And so how do we contend with that and where we're at right now? And when we come back to the chart here, let's go ahead and zoom out. We always got to do macro, midterm, micro. I'm going to double click on the chart to minimize these other indicators. Now we're going to go to the 3-day chart. We're going to go to auto. Okay, just looking at this on a basic sort of structure, we have this huge falling wedge. We all know that. We've gone over this a lot. This is it log off? Okay, there we go. Just by the way, have you all noticed the log button disappeared down here? In order to get it back on, you have to click this little gear wheel right here and come up and turn logarithmic on. The reason I noticed it was off was because I was like, I would never have drawn a trend line like this because it doesn't have 2 touch points. Yeah, I guess they updated the TradingView software. But we have this huge falling wedge. And as we know, anybody that studied technical analysis, and if you haven't yet, I'm glad you're here. This is what we're kind of breaking down. We're not just giving you, this is what we think the price is going to do. We're going to show you, these are the structures that are on the chart. This is what they mean. And this is where, this is the data that's provided and helping determine what the probabilities are going to be for the next move. So we can navigate the market, not have the market navigate us. So we had this huge falling wedge. We broke out of it just as expected. And we can see this broke out, came down, retested it twice, but we're at this pivotal level. How do we know this is a pivotal level? Okay, we moved up. Should we just be aping in right here? Well, we always, if you're wondering, go on a larger time frame, 3-day or weekly. And if you're looking at this going, oh man, there's going to be another huge green candle next. Well, if you're looking at a chart like this, first do yourself the favor of zooming out a bit. Okay, even if you had no drawings on the chart and you were just looking at the price action, this is the best indicator you could ever really focus on understanding before you move any further in trying to understand what markets are doing. And that is candlesticks and price action on the chart. Well, we can see without even drawing anything, I'm going to turn off the VPVR, the volume range visual profile. What we can see here is when you're looking from left to right, previous price action to current price action, we can see that this level, what you always want to pay attention to is price action going to an area called price discovery that it's never been, which would be past previous all-time high, meaning there's no real roadmap because there's been no price interest at those levels before because it's never gotten that high. Or is it like it is right now where it's retracing through a path that has been previously traveled? And if it's been previously traveled, then we can get a very good understanding of key zones that we need to pay attention to and what's most likely in terms of where price action might take breaks. Liquidity might find itself buying or selling. And by that, I can tell you that as we see this push up, just by looking left to right, we can see that there was a lot of price interaction right here. Support, 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 support. Even right here, support. So it kind of broke, but came back up, found support, and we're right in this level. Now, turning back all the drawings, we can see I have this range right here. And this is a key level that we're fighting to be in. And a lot of people wanted to call this the gates to the bull market. And in a way, it kind of is, but it's more like this is just putting in the key to the door, right? So this isn't quite the gates to the bull market. This is, okay, you're walking around in a dark room, you don't know your way out, and then you find a door and you have this key in your hand and you're trying to find, and then you finally get the key in the lock and you unlock the door. So this is unlock the door. This does not mean we're far down the road on our journey yet. This just means we're kind of, okay, we open the door and we realize it's not just out into the great unknown. All of a sudden now we enter into another dark room there is a little bit of light. This one is pitch black, but now since we put the key in the door, we're traveling, but we could see, in this dark space, but there is like a crack of light and we think, okay, I think that's the direction. And we see the price action kind of, we're doubting ourselves. So we come back and test. No, okay, that was the door. So let me turn around, go back. And now we're sitting here and now there's, this is like, okay, the area where it's actually you're on the path in front of the house. It's still dark out. The moon's shining through, and now this is like, okay, this is the hurdle that we need to fight through to then really be on our journey. But this doesn't mean again that we're going straight to bull market. You see all these key levels that I have marked out here from previous price action supports. We've got a lot of work to do on the way up. So as this is happening, we're also seeing a lot of turmoil within just general markets. We're seeing, if we zoom in on the NASDAQ, we can see that we've had this, let's go to the 3-day, just like we had on Bitcoin. We had this, up only, essentially. This is the genesis of Bitcoin was about right here, somewhere right in this region right here. And then for the lifetime, other than, we've had choppiness, but for large in part, we've seen this for the majority of the Bitcoin life cycle. Strong bull market. Okay. Now we've also seen some periods where there's been strong correlation. When there's uncertainty in the stock market, there's been significant drops and bearish pressure on Bitcoin. Now, what we're seeing right here is this battle between, okay, if we come right here, do option F, this is the NASDAQ, and we need to talk about this because we're trying to break down the understanding of what's happening with Bitcoin and markets in general in terms of the market psychology in the participants trading and investors in the market. What's the consensus of the psychology? Is it time to be deploying capital into risk? Are we going to deploy into risky assets, or are we trying to move out of risky assets? Because, and if that were the case, and if people are moving their assets, their capital out of risky assets, that means they're thinking the market's uncertain, and they think there may be a further drop in traditional markets. So what we're going to be looking at today, and if we look at this had a very strong, this had a very strong push up. Look at this, all the way up, right near the golden pocket, rejection, back down. Right in the golden pocket, rejection, back down. But now, shift of gears, came back, retested the 382, pushed all the way up to the 786, rejected. However, with this rejection, we had formed this falling wedge, which is a bullish structure that we broke out to the, to the downside, but now we're coming back to the upside, but now we're in a rising wedge. So if this to me is an exposition of the uncertainty of markets right now, and not uncertainty like people really think the market's going to go lower. This is a bullish structure breaking out bearishly and then forming bullish price action that is within a bearish structure. This is everything about the markets right now is just pivotably unintelligible because of all the things going on with monetary policy, the debasement of the dollar, U.S. world reserve, the U.S. dollar as world reserve currency. Everything is just so sort of broken from trend in this historical analysis of how we can determine what's going on. So we need to be very considerate about how we're engaging with markets. Now, I got a message. Alex, thanks for sending this to me from Victor Lopez. He said, can I get in trouble for using a VPN to open a trading account? I have Coinbase, but you can't short on it. As it stands right now, no, you cannot. You cannot. So, like, for instance, even whether it's Bybit, BitGet, MEXC, any of these exchanges that allow derivatives or longing, shorting that require you to have a VPN, or maybe they're not allowed in the States. The law is for their operation. It doesn't limit you from being allowed to use it. But for them to let you on, you have to use a VPN. Now, there is, of course, a bill in Congress, in the House right now, potentially trying to ban VPNs, and it's very tied in with this whole TikTok debacle and all this sort of stuff. I don't think it was, and I'm not an expert on this, but if I were to guess about how this were to play out, I don't think that that's going to be something that will make it all the way through, because to limit somebody from using a VPN is ridiculous, because it also provides a huge layer of security for anybody. I mean, just about your personal data, financial, trading. I use a VPN almost all the time. So that's good question there, Alex Green. Yeah, Matt C followed up here. I think the short answer to that is check the laws in your own jurisdiction. That's definitely true there, because I don't know where you're asking from. So let's go ahead and jump back into these charts and some of the stories. And we're going to be doing a lot of TA as well, as after we break down what's happening with some of these stories. So in the chat right now, I just want to again say thank you everybody for being here. Yeah. So let me know in the chat some of the coins you're interested in, some of the things you're looking at. Are there any setups you're seeing? I want to see if you guys are doing your homework. Are there any patterns you're seeing on potential breakouts to the upside or downside on any assets? Let me know in chat. I got an itchy neck this morning. And you know what? I got to take a sip of my coffee. And hit that like button. Hit that subscribe button. Ding that bell. We got 182 people, only 84 likes. Come on, get involved with our community here. Let's drive the crypto adoption further. Let's drive YouTube to promoting more crypto. Now, this is something I wanted to point out right here. This is Game of Trades. If you're not following this person, wonderful account. Right here it says market approaching key resistance level. This is the US 500 index, and we see this strong resistance level, and the VIX approaching key support. Now, if you all remember from, and I want you to throw it in the chat if you remember, we've had Caleb Friends on here a few times. We also had on the Saturday stream. If you've already watched the Saturday stream, there's this one right here, this Bitcoin, what you need to know. If you watch this stream Saturday, if you haven't, go and watch it. This is a great evergreen video. It talks a lot about markets, market cycles, great advice for beginners, but also stuff you can tell your family if they're asking about Bitcoin. Really great setups and strategy in here. But him as well as Caleb Franzen, who we've had on here a number of times, have talked about the VIX. And this is essentially like a volatility index for traditional markets. And essentially when this is very low, there's less incentive or less sort of grounds and support and data traditionally for a risk asset. So if it's really low, typically also below like a level, like I think the 20 line or something like that, then it's a good spot to start like de-risking yourself. But at the same time, when we're seeing this contend with, this is also a resistance zone. So this may be bouncing and this also may be getting rejected. So we need to pay attention to that. Let's go ahead and go to VIX. If you ever have, this is one of the strategies people forget about. Like you can use Google. If you don't understand somebody, the SIBO volatility index signals the level of fear or stress in the stock market. Using the S&P 500 as a proxy for the broad market meaning the wide market, not broads as they would say in the early 1900s here in New York, and hence widely known as a fear index. So this really kind of hints at it's like literally like an aggregate metric oscillator that's measuring by different stress factors and buy factors and just quite a bit of different data, what the fear and stress level is within the markets. And so when this is low, it can really signify, see the levels. Here we go. Let's go ahead and zoom into this. Yeah. VIX cannot be bought directly. However, the VIX can be traded through. No, hold on. Yeah. So, okay. The long running average of the VIX has been around 21. High levels in the VIX, normally when it's around 30, can point to increased volatility and fear in the market, often associated with the bear market. So we really want to pay attention to like having these indexes. Where was it at? Showing, at support, looking like volatility is inbound while this is also at a resistance level. Now, there's so much uncertainty about what's about to happen within the markets right now that if we're looking at traditional markets and we're trying to relate it to what's going on with Bitcoin and riskier assets, then we need to pay attention to a couple things. And that is, let me come over to, where is it? I had a chart here. Where is... I don't know where did I not open it up? Let me come back to newsnow.com. By the way, if you haven't used this news aggregator, this is great. Newsnow.com. You could come over here to crypto and you can select which particular crypto or all cryptocurrencies. Come to Bitcoin. I do think it was this one. So there's been a separation. So this week we have huge, and this is what today's stream is primarily based on. Everybody's looking at these levels as we just saw with, strong stock indexes coming to resistance, potentially breaking down further. In the same context, we also know that banks are struggling right now. We're having, we had Silvergate, we had Silicon Valley Bank, we had Credit Suisse, Deutsche Bank is also struggling right now. We have earnings reports coming out from banks this week, I believe, as well. And then in addition to all this, we have the drama going on with the U.S. dollar coming out, being navigated away from with the BRICS countries, OPEC cutting production, driving up oil prices, while we're also still trying to battle inflation. And then this week we have, this right here. And this is interesting. Bitcoin seals its highly weekly close in 10 months as CPI prepares to inject fresh volatility into Bitcoin price and beyond. Now, there's a couple key things here that I want you all to know. So this is from the Kobayashi letter. Great account to follow as well. March CPI inflation data coming in on Wednesday. Now, I want you to realize that as we're trading this data moving forward, we may have a lower CPI reading for March. Okay, we very well may. I have noticed some prices going down while other prices going up. And let's be honest, some of the ways in which they're drawing the information to create this economic reports is very skewed. It's almost like they're trying to shape a narrative to make the data support the things they want to do within the markets. Okay, well, either way, what is CPI? What is the Fed? What is PPI? So just really quick for anybody, I know you all know that this has drastic impacts on what's going on in the market, especially right now when everything's on a knife's edge. Well, CPI is a measure. CPI measures prices at the end user level. This is consumer price index. PPI measures the price producers pay at the wholesale level. So this is a producer's price index. And headline CPI tracks all prices, but core CPI strips out food and energy prices. The PCE, which is personal consumer expenditures, I think it is. I think that's what it is. And source material make the Federal Reserve's preferred inflation. So if we come over here, and you can find this at, I'll throw this in chat if you just want to read up. You just want to read up on this a little more. And we talk about all this in BitLab Academy as well. But here we go. So a trio of inflation indicators: CPI, PPI, and PCE. So CPI, Consumer Price Index. Okay, and this is why I was saying the next 7 to 8 weeks could be very interesting for what happens within the markets. Could be very bullish. And then that bullish sentiment could be cut short very quickly by a shift in monetary policy and also shift in economic news, because we very well could, because we did start seeing some disinflationary data come in. So we may have a lower CPI read for March, in which case we it's kind of a basket of confusion with that, because it could send the prices higher, but then that provides more ammunition for the Fed. If they're seeing the CPI come down, but they're also having banks be pressured, but then they also know that the OPEC countries just cut oil production, which inadvertently or maybe strategically advertently in the next 6 to 9 weeks will start, or maybe even 2 months, 2.5 to 3 months, we may see inflation start rising again, because the cost of transport, the cost of logistics, the cost of producing goods. You know how much stuff is produced with oil and petroleum? It's not just gas in your car. You know, I have all these lights around me. This green screen that's behind me. It's a good green screen, right? Sometimes you can't tell it's a green screen. Next week, I will be back in the BitLab. It won't be a green screen. But all this stuff is made with petroleum-based products and about, a mix of other goods as well. But when we're tracking consumer price index, this is the result down the line from the PPI, which is the producer's price index. Okay. So if the CPI is falling now, but then over the next 3 weeks to 6 weeks, the PPI, the producer's price index, goes up, then what we're going to see is if their costs go up, then that gets, basically passed on to the consumer, several weeks to a month or two after the cost of goods, the cost of production goes up, then the cost at the pump, the cost at the store, the cost on the shelf goes up. So we have a very it's like the market and every individual is playing chess with each other to figure out how to take advantage. And this is one of the reasons why, when we're looking at what's going on with the price, this is one of the reasons why I very much think that we are going to get something. We are going to get a strong bullish initiative, strong bullish impulse that drives price higher. Now, the question is, and I want you all to throw it in chat right here, because we have to use data to figure this out. We have to use risk management to really figure out how we can capitalize on this volatility that is risky. How do we capitalize on this volatility to turn profit, to make money larger in our account? Throw one in chat if you've ever done this. You've been investing, you've been trading, and you see the dollar amount in your portfolio just going up, and you're screenshotting it. You're feeling, man, I feel so good about this, and you didn't take profits along the way, only to watch that go down. And maybe you capitulated, maybe you didn't, but not taking advantage of understanding. We've talked about this a lot on this channel. Understanding how this moves right here, and then sideways, and then up, and then down. Or in 2019, we have the strong push, and then this very strong dip. You know, for somebody that was very attuned with what was going on in the markets, could take advantage of buying at these levels because they understood the data. They saw smart money, long-term investors. They saw on-chain data. They saw that the short-term holders had capitulated and the large wallets were accumulating. So they waited for a breakout of this position, and they bought here, took advantage of this, took profits somewhere along the way here, let the market come back down, was able to accumulate more and take advantage of anywhere in this region, and then ride this up and take profits anywhere in this region here. Capitalizing on the volatility is how you make money in this market. Now, to compound how much you make in this market, but the only way to do that is if you have a plan, if you have a strategy in mind, if you have a strategy in place that you've practiced, and you're able to separate your emotions from it and be as mechanical as possible to follow your strategy. And so what we're doing right here, let me go ahead and I need to delete all those, otherwise I'll come back and wonder why my chart's so ugly. So what we want to capitalize on here is the traditional markets look like they very well could be in for a downward push. Bitcoin's getting very excited right now. If we look at some of the on-chain data, I mean, we do see the addresses with over 10,000. Look at this. Let me zoom out. Look at this right here. We've got the strong, look at this, the number of addresses with over 10,000. They were accumulating through all this. Now we have the FTX debacle, crash right here. A little bit of sell-off. People protected their assets. People are a little scared, but we're seeing this U-shape right here. This is addresses accumulate, number of addresses with over 10,000 growing. So this means the addresses between 1,000 and 9,999, those very large accounts are accumulating still through this right here. But if we back this off a little bit, look at addresses with over 1,000, we can see this is not yet really ticking up, but this has, they were selling off or distributing out of their positions through here, but this is starting to flatten here, which is great. Addresses with over 100. This has been fairly flat. Addresses with over 10. This has been accumulating through this entire sort of downtrend with a large, you see this right here? Every one of these on-chain things is different, but you see this right here? Sell off, the market capitulation. Addresses with over 10 Bitcoin. Look how many people, these are the very aggressive, this shot through the roof right here and still accumulating. Addresses with over 1, very, very strong, taking advantage. The market, the smaller participants, all of us fish here, shrimps and fish and plankton, all of us here, we're not whales. The market's getting smarter because there's channels like this. There's so many tools out there. BitLab Academy, there's, our courses, there's, so many different avenues that people can learn, and knowledge base is growing. We're seeing these smaller people take advantage of really accumulating in these moments of strong data-driven, identified good accumulation zones. Now addresses with 0.1, same thing, boom. Addresses with 0.01. I mean, we're seeing a lot of adoption. If we come over here to, I think it is this one right here, 3,467,156 new Bitcoin addresses connected to the global network last week. Now, does this mean each individual one is a unique person? No, it does not. because, you know, even for myself, I probably have 3 addresses, right? But what we're seeing is these all are data points where we're seeing the fundamental adoption rise, and we are seeing, this is something I want y'all to pay attention to. If we come down to the hodler net position change, we could see, I feel like I have allergies this morning. We can see right here, there's a little bit of offloading. I'm gonna take my face off so you can see the chart. There's a little bit of the redness is indicative of them reducing supply. So if this is reducing supply and we're also seeing a little bit of a market rounding top sell off, this is, you know, a reduction of supply. Look at that, a pullback, and then right here, accumulating into this move and then taking profit, getting out. Now, people, the hodlers are starting to accumulate again, but now if we come over here to long-term holder position change, now this is still a little bit concerning here because the long-term holder position change, we could see, but let's see what date this is. Okay, this goes to, so this is good to see. We can see that there's a sharp uptick right here, but as it stands right now, it looks like some of the long-term holders were taking profits at this level. And look at this flatness right here as this was pushing down. So what does this mean? This means that as they were selling off, that means if we look at the short-term holder, that's actually this one right here, we can see that the short-term holders are buying at this level. So now the concerning factor with all this that we need to pay attention to is there's a lot of mixed signals right now. So we see some long-term holders taking profits at this level, and we see the flatness. We see short-term holders, which some of these could matriculate into being long-term holders. So as something's bought, once it passes that 155-day mark being held without being moved, then it becomes classified as a long-term holder. But we're seeing the strong supply buy from weaker hands, though. These are considered weaker hands. These are statistically much more likely to be sold. And so the problem with this is, and this is why it's so important to look at a variety of different data. Because we could see short-term holders were buying, but we're also seeing addresses, and let me caveat back there. The short-term holders buying can lead to a conclusion or a thesis that there may be weakness coming into the market. If it's short-term holders buying and long-term holders selling. Because if we come back here and look at this, short-term holder net position change. Okay, no, right here. So we see right here, this is the strength of the bull run. We see short-term holders buying this hype cycle. And we've talked about this so much on this channel. Let's come to my page. And I've outlined this for you. If you have not seen this yet, come take a screenshot of this, download this. See this hype cycle buyers, no conviction. Smart money take profit zone. Okay, this is that same period that we're looking at when we look right here. Okay, so we're seeing short-term holders buy. Now, what are long-term holders doing? Long-term holder net position change. Look at this. Complete inversion. So what did this lead to? This is long-term holders taking profits at this, and we see this rounding top. And what does this mean? If long-term holders were selling here, short-term holders were buying from these sellers. And now what we get is market weakness because we have short-term holders, and short-term holders are known as weak hands. They trade market volatility because they are professional traders, or they capitulate because they are retail that bought hype and now they're scared because the market pulls back a little bit. So there's no strength there. And long-term holders aren't buying at market tops. So if they're capitulating, then there's no support to keep the market at that price, which is why you get those sharp sell-offs. Now, what happens when we get a dip? Ooh, dip, long-term holders. Okay, this is an opportunity, buy. So we're getting a lot of mixed signals right now. We go back to this story here. Where was it at? This week, where we're at right now, we looked at the price being at this key zone, and we're trying to determine whether or not price is going to go, are we going to get a wick up here and trap a bunch of retail traders only to reverse back down? Are we going to wick up here, consolidate, and then break through? If we break through this red box here, then it's very, very, very likely. I'm getting a spinny wheel. I'm not sure why. Okay. If we break through this red box here, I have very strong feeling that we are going to push higher up into this 34 to 36 range, which is this zone right here. But it all hinges on a number of different things, and we're seeing a little bit of a separation. I really thought I had a story on here. I don't know where it went. We'll come back here. Is it in here? Okay, yeah, here it is. So Bitcoin price volatility on the up. So if volatility is what traders want, they arguably already have an abundance of data. According to market data, Kaiko, Bitcoin is on a divergence path from equities. This is what today's stream is truly about. When it comes to volatility, increasing action while the NASDAQ is cooling. The events of the last month centered around the unfolding of U.S. banking crisis were enough to send the gap between Bitcoin and NASDAQ rolling 30-day rolling volatility to its highest levels in a year. So Bitcoin is separating, it's breaking away from the traditional markets, and volatility is inbound, and we're seeing a huge potential narrative shift about where safety is in the market. Bitcoin has been around long enough. I want you to consider this. Bitcoin is still so new, but it has been around long enough now that we've seen huge volatility that is, shot thousands and thousands of percent up and broken down. And, if we come back here, Bitcoin has died. I forget what it's called, 99 Bitcoins. Come over here. Look at this. Bitcoin obituaries. Bitcoin has died 473 times. Okay. Now, what qualifies as an obituary? Let's look at this. As a prime source of Bitcoin obituaries, we use guidelines to qualify for an obituary, meaning Bitcoin dying. The content itself, not just a headline, must be explicit about the fact Bitcoin will be worthless, maybe, or could be. No, maybe, or could. The content was produced by a person with a notable following. So this is when you're seeing headlines and stories from CNBC or MSNBC or Forbes or Bloomberg, and they're talking about Bitcoin's dead. And we see like right here, okay, Bitcoin breaking down. Well, Bitcoin is dead. They call Bitcoin dead here, and then it died here. Then it died here again. This has happened 493 times from notable data, news sources. Okay. And so we need to stay away from what the mainstream media news narrative is around about what the health of Bitcoin is and it being dead. If there is a headline or a news article in a major publication or a major media conglomerate, whether it's news media like actual video or print, if it's on the mainstream news and they're calling it dead, that is actually a great signal that it's very likely coming up to, if not already, a good time to buy. And when we're seeing stories like this, and we're seeing correlations break, and we're seeing gold rocket right now because people aren't trading. Gold is the traditional safe haven asset for a store of value as opposed to the traditional asset. So when people are fearful about what's going on with the economy, they think that investment assets are going to start tanking or have strong pullbacks. Excuse me. Then they move into gold. They look at it as strong, and there's this narrative, there's this speculation about Bitcoin being digital gold. And there is some truth to that. But of course, it's very different because you can also transact it immediately. You can also store it. It's also not something that's confiscatable. We look back to 1923. I think it was 1923 when they confiscated all physical gold from people holding it. You had to turn it in and get treasury notes. There's been such a long labored sort of narrative around what a safe haven asset is and then the nature of money and currency. But we're seeing that Bitcoin is taking on a bit of that as well. And we're starting to see the shifts, with the shaking of the foundation of the core mainstream belief in the fiat system. And, we're seeing, let me see if I can pull this up. Banking deposits drop 2023. Let's look at this data. It's March 31st, 2023. U.S. bank deposits lending both dropped last week amid turmoil. Deposits into bank fell $126 billion. You see this? there's a narrative shift underway right now. And even if it isn't fully, and we have to understand this, as much of whether you're a Bitcoin maxi, a crypto maxi, a Cardano maxi, all of these things are intermixed, and understanding what's going on with traditional assets, as well as the fiat system, as well as monetary policy. But we need to understand the narrative between all these things, because although the belief in banks is being at least tested right now, it doesn't mean every dollar is going to go straight into Bitcoin. There's other safe haven assets that people are traditionally minded, fiscally traditional people may be more interested in gold because they don't understand Bitcoin yet. But the narrative is starting to shift, and we are starting to see a breakaway from Bitcoin, from the traditional assets. We are starting to see long-term holders. I saw a story on here as well. Let me see, 1 year. We can see, we can just look at it right here. We can see that there's a narrative shift coming onto my screen, a shift between basically the strength of 1 year holders. Is it right here? Here we go. This is a story. The number of inactive Bitcoin touch its 2-year high. So what is inactive Bitcoin? Why does this matter? Inactive, it means one of two things. It's either lost, which there are probably a few million out there that are lost, 2 to 4 million, which in reality drives up the value of every other Bitcoin, because there's only ever going to be 21 million Bitcoin. There's not going to be inflation past that. It's a fixed asset supply. Of course, currently we do have inflation that is in the nature of miners' rewards. That's what this whole halving cycle is based off of, which is why there seems, which is why there seems to be a regularity to come in here, halving. We've talked about this. This is a halving cycle. What does it look like there's any pattern here? Well, it looks like post-halving, this means the miner rewards are halves. Strong push where we get our push, pullback, push, top of the bull market. And then we have about a year or so. Let's see how long this is. We have about a year or so. 530 days to accumulation. Okay, let's see here. About 440 days. Okay, let's see where we're at here. 550 days. We're having a regularity, a pattern here that whether or not, I want you to understand this, whether or not it's directly tied to the 4-year cycle, or maybe it's tied to global liquidity, maybe it's a little bit of both, but there's a fixed understanding of the supply that's coming into Bitcoin, which helps us understand the supply-demand dynamics. And as the narrative is growing stronger for Bitcoin, and the fact that it is immutable and you can't change, you can't have somebody just all of a sudden prevent you from owning it. Now, because you have it. Once you have it, it is yours. And we're seeing this in the turmoil of the banking crisis and the turmoil of what's happening with assets, that we are on this cycle while the traditional markets are struggling. We very well may get a strong push up and then very likely pull back into this next projected halving date. So we want to take advantage of this. Now, looking at this with some actual data, let's look at some of the indicators. We can see we're on the weekly here. Let's go ahead and delete this line here. We can see we've got, this is all the volume data, the VPVR, volume at these relative prices that are, I'm on my screen now, screen up. We can see that this, just for anybody that doesn't know, this VPVR or VRVP, it's the same, two versions of the same thing. This is the volume transacted at the relative levels that are on the price action to the right. So we can see that there's interest, more or less interest at different levels. Right here where there was less interest, look at this, price action rocketed right through it. Now, if we zoom in on this a bit, we can also see we're on the weekly right now. And we can see that, let's see what these, so we have the 21, the 50, the 100, and the 200. Now, this is on the weekly, and let me see. is okay. Oh, with the blue. Okay, so we've there must be an extra one on here. All right. I don't understand why that's 200. Yeah. Sorry, I was having a little issue on my side. We're gonna come over to right here. So we're at this key level. We're at this key level right here. And we have, for anybody that doesn't know, if maybe this is your first time, or maybe you just don't know what divergences are, the BitLab trading stack that this is a primary one we use on this channel, because it aggregates a bunch of data from MACD, from money flow, from buying and selling pressure, from volume pressure, from lack of volume pressure. It reads a ton, like in terms of this market intelligence one here, it reads divergences from on balance volume, Chaikin money flow, relative strength index, stochastics, momentum, MACD histograms, money flow index, as well as showing high and low pivots on price action, which you can see here. And we were working in a bunch of updates right now as well. And then, of course, we have the hidden volume down here and the relative extrema. This shows the health of movements within a trend. And then we have this aggregate, this significant movement, which is aggregating a bunch of the momentum indicators from stochastics and RSI and a number of other ones, so we can get a consensus when things are overheated and or overvalued, and a consensus when things are undervalued. And so when we plug in together divergences with high or low pivots. For instance, we have a low pivot here. We have 3 bullish divergences. We had these relative extrema bars sticking out to the downside. We had a blue wave showing everything is very undervalued. And so we get this consolidation until we get this bullish. I'm going to zoom in on this just a little bit. We can see this right here, this bullish divergence on volume come in. So we had all this setting up, and then this was our trigger right here. And then we had this move to the upside. So now we're having one bearish divergence. This is on the weekly, mind you. And we're getting a bit of a bearish narrative dominating with the volume at these levels. And we're seeing a little bit that it's overheated here on the significant movement, in addition to seeing the relative extrema having had sticking out from this aggregate momentum cloud that we have here. Now, understanding this, we always need to look at multiple different time frames, because while this does show that it might be overheated, it doesn't necessarily mean it has to completely break down, because things can be overheated for a good period of time. I mean, look at this. Look at this bull market. Look at this red wave. This just means that things were like overwhelmingly strong for the period, for a large period of time. Now, and the momentum oscillators, for instance, if we look at the traditional assets here, see right here with the stochastics, look at, these are just up on the very high side with a little bit of pullback, very high side for a long period of time. So when we're looking at the relative extreme, the significant movement here, we don't want to take a trade and say, we got to sell because it's overheated. No, this is just, sometimes can also signal, if you're not getting other things in consensus, this could signal that things are just on the there's just a lot of buying coming in. We want to watch for bearishness though. So here on the weekly, let's come down to the 3-day. We went a bit neutral here on the pullback. And look at this, 8 bullish divergences. And, then we got the relative extrema down, which gave us that signal to move higher once we got, and so one of the things I want to point out here is this right here. Understand this, because this is not just RSI. This can be stochastics. This could be MACD. MACD doesn't work as well, but using them in conjunction with having multiple different divergences, this is critical, because what divergences is it's essentially like a lens looking into the market psychology of what's happening within the underlying market in relationship, in terms of in agreement with what's happening with price, or showing something that's not in agreement with what's happening with price. And we've talked about this a lot, and I always want to make sure we remind people of this, because sometimes people haven't grasped it yet. Sometimes there's new people watching. So when we're seeing these flags are reading divergences. Well, what are divergences? Let's come back to MACD. Where are we at? So divergence would be, we see this high point right here. We see this high point, and then this high point is higher. Well, looking at here on the RSI, the relative strength index, we have this high right here. See this lined up? Now this high goes, the price action goes much higher, but the RSI, now what does RSI stand for? Relative strength index. Now this high had a higher strength index than this, meaning this high, if you really think about it, has weaker strength than this next high, meaning there's less strength coming into this move. Thus, we have a bearish divergence showing right as we get to a level of a potential price action pause because of previous support. So divergences help you read into this. And this is why I love using the market intelligence part of the BitLab trading stack so much, is because it's reading a bunch of, like, I think 9 or 10 different strength and momentum and money flow indicators. So without having to have them all up on the chart, we can see right here, we had MACD histogram, RSI, and money flow index all showing divergences right here as we paused. Now we're still looking at the 3-day. Let's come down to the 4-hour and see. Let's see what's going on here. What are we in for? Now we're getting a strong consolidation range, but if we hide all the drawings here, we can also see we're riding up above the market intelligence EMA ribbon, and we're kind of bouncing into it, and we're seeing it constrict. What do I mean by constrict? It's very wide here, and it's getting tighter. And it tries to expand it, but it's getting tighter and it's getting tighter. And in addition, I can't just do it individually, but we can see this line right here. We are consolidating into this point, and we're getting to the apex of this point, meaning nearing the end of where, if this was a line right here, let's make this very bright. We see this line sort of right here. And we could see this line right here. Let's make this very bright. We could see price action is coming into this apex. Now, there's going to be a move, and I want everybody to be very cautious into this next move, because there's a very high potential that it will wash out both directions. Meaning it can either break down, wash people out, and then rocket up. Or it can move very fast to the upside and then come down, test, come up, and then there's a lot of indecision in the market right now. So you need to have a plan in place. If this does break to the upside, we can look over here at CoinGlass. Coming to CoinGlass, we want to look at the funding rate, and we can see if more people are going long or short. So the funding rate is positive right now, meaning more people are going long. The highest funding rate is this negative? So it's a little indecision. So let's actually come over here to look node. We go to funding rate. This is giving us a window into what the derivative traders are doing. And okay, so yeah, there's a majority of people, there's a lot, and we saw the long-term holders were de-risking, taking stuff out of the market, where short-term holders were entering and increasing their positions. And we could tell that as well, because we're at a level of key resistance, but we're seeing the funding rate positive, meaning that there's a lot of, it costs more money to take a long right now. So they're paying the shorts, which is very interesting to me right now. It's very interesting to me right now, because this is showing actually more for me, more of an incentive to, if the fact the price action does move up if it moves up very quickly, if it, once we break above this and we start moving up, I would be keeping an eye on that funding rate and what the long to short ratio is. Because if there's a lot of retail coming in at this level and there's no shift in long-term holders taking advantage of the move, then this very well could come up to this 32 to 34K region and then reject back down. So there's a lot of indecision in the market right now, all that to say. But we are coming into an area that a likely move is going to take place. We're getting overheated here on the significant movement. Let's come down to the 1 hour. Oh, look at this bullish volume coming in. These bullish divergences on hidden volume. We were overheated. This has gone neutral, and we're getting 3 bullish divergences. So if we break above the 28,650, then I'd be looking for a move to the upside. But I want you to have a strategy in place. If you're going to take any position here, then I want you to have a fairly tight stop. I want you to protect yourself. And this is, this is actually pretty advantageous here, because if the price action moves to the upside here, you don't need to front run this. If this breaks up into this area, you see there's a lot of wicks. If you take advantage of any move, what I would recommend is being on the cautious side here and letting something, you don't take advantage of it just because you saw a wick above here. You let it come up, retest this volume here and this line of previous resistance, potentially now support. You want that to happen. You want this to break out, retest this, and take advantage of this move right here when it breaks past that high. And you can have a pretty liberal, you don't have to be so conservative on your stop loss, because we're so near an apex here of this formation that you can have a stop loss all the way down below this low right here, which is because I very much think that we're going to get a lot of noise when we do break out of this region. Now, everybody in chat, I want to pay attention to chat real quick. I want to see how what's going on. Did I get any other messages from my people here? All right, so what we got? What's going on in chat? What questions do you have? What coins? Okay, I see INJ, Injector Protocol, Arbitrum. What other coins were you all interested in? We're going to take a peek at Ethereum. We'll take a peek at Cardano. If you are holding ADA, throw ADA in the chat right now. If you're an ETH holder, throw ETH in the chat right now. If you are, what's another one? If you've been one of those long time XRP holders waiting on this on the news to break, throw XRP in here. If you're only a Bitcoin holder, throw Bitcoin in there. If you're a maxi, you type maxi. And none of it's wrong. Everybody to each his own. Anybody can invest in whatever they want, as long as I really want to incentivize you to have a strategy in place. Now let's come over here and look at Ethereum. Ethereum is a big one, because let's come over to news now. We can come down to, where is Ethereum? So looking here, okay, so looking here, we got, was it 2 days? Is that what it is? I think it's, yeah. Okay, so so one of the things is there's a huge narrative around Ethereum right now, because the Shanghai upgrade is going to allow withdrawals from the staked Ethereum for the first time since 2020. That's when they started staking. But the problem with this is I don't think a lot of people realize this is not going to be immediate. I think I believe it's going to likely be. It's going to take some time for some of the staked ETH to come out. And I think there will be likely a little bit of a run up on the speculation here. But I do think there's got to be, this is very bullish for Ethereum in the long run, but you need to be, you need to be comfortable with the coming volatility that is likely to come with Ethereum. So here we go. That's a 1 hour chart. What am I doing? Always got to look. Okay, here we go. I was wondering why I didn't have anything drawn on there. So we had 2 different major trend lines I had drawn here. We have a major fib. This was a fib that we did, broke out past the golden pocket. This is Ethereum to US dollar. Now let's go ahead and delete that line. We're coming into 4 bearish divergences, and look at this. We have bearish divergence on the volume. So this is gives me a little bit of pause, and we're overheated on the significant movement. Now we are on the 3 days. So let's come down. Let's divide it down. Let's look at the 12 hour. Now this is starting to shape up to tell a little bit different of a story. We have got, give me 1 second. I got to blow my nose. I'm back. Sorry about that. These allergies up in here in New York. So we can see that we're cut on the 3 day. It looks like we're very much coming into a key level of resistance as well. This was the zone right here. Double bounce we see here. And we're coming up right into that level. And we on the 3-day are getting some bearishness come in, but if we come down to the daily, still overheated here on the significant movement. 5 bearish divergences, which did pull back, but we're starting to round here. Now coming down to the 12-hour, we're getting a little bit different of a narrative. Look at this relative extrema. The momentum wave was trying to break down past the 0 line, aggregate momentum wave here, the cloud. And these bars show the health of every bar's price action movement. Is it healthy or not? If it's within the cloud, then it's a healthy movement. If it's sticking out of the cloud like this or on the opposite side of the cloud, then this means price is moving down, but there's underlying bullish pressures and the bearish move, the bearish attempt down. I don't want to call it manipulation, but the bearish attempt down in price is not healthy in terms of how it being sustainable from the actual buy and sell pressures and the volume and other key factors. And so we saw that attempt down, and we see this sort of coming to the upside. Now, if we come down to the 4-hour, let's see where we're at. We're getting a lot of choppiness, but let's go ahead and do a trend line here. This is a very, very ugly trend line. No, not getting. Okay, here we go. This looks a little more realistic. There we go. So we are. It looks like a little bit of a falling wedge here, a falling channel. Yeah, I mean, so this looks choppy to me. The 12-hour found support with this coming out, but now we're up in the top of this range. Checking money flow, bearish divergence coming down to the 4-hour. We're up in that zone, and look at these candles. You see, just looking at the candles alone, we could see strong momentum candle, and then we see a shooting star candle. Then we see almost a doji, almost a hanging man candle. Then we see a spinning top. This is likely reversal candle, another likely reversal candle, indecision candle, now hanging man candle. All of these are signaling as we're at a resistance level. And look at this, relative extrema is sticking out to the upside, showing the bulls are not having healthy movement, but we're holding at this level. So it'll be very interesting to see what happens here, because this looks very indeterminable, and the relative extrema was out, but the significant movement, which is the aggregate momentum indicators, are starting to flash blue again. So who's to say what's going to happen here? Let's come down to the 1-hour. So, okay, this made an attempt. We got the bearish div on the volume. Such an overlooked, people need to use this more within the BitLab trading stack. Bearish div, and this came down. We got gray on the momentum aggregates here, so which is neutral, but on this move, this attempt down, the relative extrema is out to the downside. We got 3 bullish divs and then an attempt back to the upside. Is this going to continue going up? Let's look at 24-hour, or 24-minute, I mean. Okay, we're starting to see, this is that rounding. You see how we have a candle, a momentum candle? This is a reversal pattern. And then we have, I think it's called a Morningstar Doji. And then we have a larger bullish candle, okay? This means momentum's increasing, followed immediately by a significant reduction in momentum. And now we're getting that rounding as we come into this area. So I would be a little bit cautious here, but the play here is within 2 days, we have a major upgrade coming to Ethereum. So you need to be very patient about what is possible here. So the strategy to play here is on breakout. Well, one, we can go, let's go from not the wick, but the body here, option F, come down to, okay, this is interesting because, okay, let me zoom out here. Yeah. So if this were to break out, from here, we could see that as soon as it breaks out, we have a huge point of control right above us with the volume. This line that's sticking out of the VPVR, huge point of control, meaning there's a lot of price act in this local range that we're looking at. This is on the 24-minute, so it's not a huge range, but there is a point of control right above us. Now, if we zoom out on this, we can still see that we have a point of control below us, and let's look at it right here. Okay, so we do have this high volume node right above us. If we're able to break out of this, I would be paying attention to this sort of range, right? The volume node that we have right here, which is just above us. And then of course we have the golden pocket right above that. So these two zones, there's basically, this is going to be a bull trap, catching a lot of people and then get rejected here and come down, test maybe this level here, this point of control. But I would be very cautious because of the need for bullish sentiment that I'm noticing within the crypto ecosystem right now. People want the market to just go to the upside, but there's so much indecision based on what's happening with traditional markets and the global liquidity coming in, but then monetary policy. And we have this, people want bullishness, and market makers know this. Smart money knows this. They can break this out only to trap people in this region to then bring it down. And then you sell on the way down because you feel like you missed a move and you trade it emotionally. And that's not what we do. We don't trade emotionally. We use our strategies. So yeah, with this, I would be patient with this. It looks like right now it's pushing. It's pushing. So we're getting that move that I was just talking about. Let's come down. So let's see if this is going to be a fake out or not. We can see that the relative extrema, I hate this paintbrush tool. It always stays on. Relative extrema. Let's look at it. It is sticking out of the cloud, and we see this quick move up, and then the price action is not being sustained. So it's coming down very quick. These are those trap moves. This is a perfect example of a trap move. It breaks out. People go, oh, I want to get a part of that candle. So somebody bought right up here, the very top of this. This is how the candle got up there. Somebody market bought, or even very quickly limit order bought right there, only to have the price come back. So we're going to see what's going to happen here. Let's see what's happening with Bitcoin. Are we getting a move on Bitcoin? Oh yeah, we're getting a strong move on Bitcoin as well. Now Cardano is looking. Let's look at the 2-hour auto. So we did have this line here. We did break above it. We found support, but this is going to be, this has kind of been in a range. I'm going to move this line because it looks like there's 1, 2, 3, 4. This looks more appropriate for, so I would be finding support on Cardano at about 39 cents. And then from there, the next move up would be somewhere in this region, 39. Okay. 39, the next move 40. Yeah, of course. But we can do a fib option F to the bottom. So yeah, the next move from here, breaking out up from here would be 39.80, 39.81 in this region here. And then the next move up to the top of this zone, which is about just shy of 41 cents. And ultimately we would like to get up to retest this resistance level, which has been this zone that we've been trading in, oscillating in, which would bring us all the way also up into this region right here. A lot of price interactivity. And so if we were to get up into that zone, come on, VPVR, there we go. If we were to break out up into this zone, this would be up into the 43.5 cent level. Now see, INJ you guys wanted. I don't think I've looked at, a lot of people like injector protocol. I believe that's what INJ is. So see, I've never even done this one. So first thing I'm noticing, looking at the 8-hour, there's quite a bit of a bearish structure here. We've got a rising wedge, which is bearish. If it points up, it's likely to go down. If it points down, it's likely to go up. So we could kind of do this on two different, option T. Now these are way too bright, so let's go ahead and move these down. I don't like it when the trend lines are super duper 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 bright, because then it really makes it hard to look at your screen. So this is, this is really bullishly pushing up. It is within a bearish structure. However, if the market starts moving very bullishly, it can ignore this, because these smaller cap coins, if the market is moving and strong in trend, then they will tend to follow you. And you see, this is a bearish bearish chart formation. And we are seeing that we're coming into overheated zone, but this is on the 8-hour. Let's come down to the 2-hour. Yeah, overheated. We did get a bullet. Look at this. This is funny. This is the indecision of the market. We're getting a bullish div, which is bullish on volume. We're getting the relative extrema. Look at this. It was Very unhealthy bearish, very, very unhealthy bullish. I mean, this is just flip-flopping right here, and we're getting a bearish consensus of basically overvalued here on the BitLab significant movement. Now, where are we at? Okay, injector protocol. Okay, yeah. So now, what was another one you wanted to see? So if this were to break out, though, let's go ahead and go to the 8 hour. This were to break out, we're at a key level right here. This, yeah. We could tell because we have these levels here. So we have a price action support, my mustache itches. Support, a lot of price action interactivity here, rejection, and we're right in this zone here. If we're able to break out of this zone, we go to the 12 hour. If we're able to break out of this zone, then I would think that option F, which is a Fibonacci, bottom to top, top to bottom, I should say. The next zone would be, and this is perfect. Look at this. This breakdown of this whole region here to the low, the golden pocket, this right here, 0.618, 0.65, is perfectly in line with where these tops were, this rejection point, strong push up, rejection point. So if this does push up from here, I would be looking at a target up to $9 and $9.80, $9.70 to $9.80. But again, you have to proceed with caution because this is a bit of a bearish structure. This rising wedge that we have here. We can even draw this back further, like this. So although it is a bearish structure, if the markets do move very strong, we can see, look at this. There's a lot of, there was a lot of interactivity back and forth between the bears and the bulls, divergences on volume. And then the bearish narrative sort of evaporated a bit, quite a bit of bullishness, little bit of bearishness, quite a bit of bullishness. So if this does break out from here, I would be patient. This is why you want to, it's very important that you ladder your entries. You don't just go all in as soon as this breaks out, because just like we saw on Ethereum, we had a strong push up, wash out back down, and now it's trying to find its sort of footing if it's going to continue to the upside. Now, what we would, as I said, we would target this level here, which is about a 58 to 65% move to the upside. Now watch out for, there's going to be a couple levels along the way though. We got this right here, option J. Let's go ahead and make this orange. I had this red from something else the other day. Now we can come down like this. And why did I do that line? Because this was support and resistance. So if this were to break out to the upside, the first target I would have is this level right here, which is a 30% move to the upside, but it was both support and resistance. So it gives me a key indication that this is a likely target for at least a pit stop, or maybe at least taking out your initial investment on the trade. So you're just, the rest of it, you're trading with house money, or you're taking some profits. You don't just go all in and all out. Ladder your entries, get a couple, if you're going to be very aggressive, only do it with a very small percentage of the full trade position you're trying to take right on breakout. And then when it retests, add more to the position. And then you immediately take profit, some percentage of your trade at this level. And then from there, you can move your stop loss up to whatever is within your comfort, that's based on what the metrics are that you're looking at that time. But you move your entire stop up into profit, so the entire trade, no matter what, is in profit. And then you set the rest of your targets up in this golden pocket here, leaving a smaller percentage, 15% or something like that. These are just different strategies, not financial advice. These are just strategies traders use. And you can leave the rest, as Wendy O calls it, your moon bag. So you can just take advantage of already taking profits on the way up. You're not going to lose any money on that trade. And the rest that you have as your moon bag is just there. And then you can reallocate your capital to other assets that have not yet broken out yet. And this way you could take advantage of the liquidity flow within the market. Now, do we have any other ones? Let's see. We got a lot of stuff we can cover. I don't even, let's just go through. Let's look at AVAX. Got that. XRP. So AVAX has this large position, large trend line that has been fighting, and it is. I mean, I won't fully call this broken out yet. I'll call it's in the breakout region, because these lines can't be exact, although they have been. But this has broken through this level, and it is riding right on this. And look at this relative extrema. We're on the 8 hour. Look at this relative extrema sticking so far to the downside, and we're getting bullish volume, more interest coming in, supporting this area. And this red overheated, which was cause for concern in this region here because we could have broken right back through, has gone neutral. So we've gone neutral with bullish sentiment and a bullish divergence. Now let's go down onto a smaller time frame. Now, this is a little bit concerning here. We look like we may have a little bit more consolidation left because just on price action alone, we see this rounding, see the momentum candle, you know, this bullish impulse, and then spinning top, doji, a little bit of a shooting star doji, hanging man, a lot of indecision here, and the relative extrema is sticking out unhealthy bullishness to the upside. So let's go into more resolution, meaning smaller time frame. 1 hour chart. Okay. Now this, we can see the chop here, bearish divergences into bullish divergence, but we are neutral. This is looking like it's a sort of a formation within a formation. It's really struggling right now to make clarity of what's happening. I don't like that. Yeah, the move here was the W formation, breakout, retest, and see this right here. This is why you know this whole thing that I've talked about so much, where when you break out, you don't just buy the breakout, you wait for the retest, and then ongoing higher, you buy the break above this level right here. This is a previous high. You see that had you taken that conservative approach, a lot of people are like, oh, it's breaking out. So they buy right here, and then it sells down and they get scared. So they sell and they get out of the position, or they buy this breakout and it comes down and it's starting to move up. So they buy right here. This is a move. But then look at this. It got right almost exactly at the previous high, and it did not break past that. So this would not been on a more conservative, traditional, consistently profitable trading strategy. This would have been a nullified. As exciting as this would have been nullified. And for those of you that were patient, and those, I mean, like that you're actively trading this. For me, I'm holding this. I bought way down here and also previous cycle lower. So I added it to this position, but I didn't trade this breakout because I'm already in position. But for those that are trying to take advantage of trading this, had you not taken this FOMO trade because you see, oh my God, it's going to go, I'm going to buy it, and then it just reverses, or you're trying to front run this, had you been patient, you can see that this price action has come lower and it's come back into these levels. And this is interesting, is that it's essentially in this zone right here of, look at all this price action, resistance, now support. It's dipped into the support, but now it's finally getting a little. So this is a little bit of a bullish case that, you know, on things starting moving bullishly in the markets, AVAX very well could be well positioned. So let's look at another coin or two. Filecoin, I know it had a lot of volatility the other day. Go auto. Okay, let's go to the 12-hour chart. So I mean, look at how much fell. I mean, 98%. Holy moly. So this is where I took advantage of it down here when I got in to Filecoin. And so now we're seeing, I mean, we are seeing these bullish pushes, these bullish impulses, and then corrections into a bullish structure. This falling channel, falling wedge, bullish structure comes into the blue overheated or undervalued zone. Same thing, push up, lower high, but bullish structure. Now we're consolidating. This is rounded. And so we are getting a little overheated. This is on the 12-hour. Go to the 4-hour. Look at this. Strong bullish sort of signal here with the relative extrema pushing very deep right here. It's almost like when price is going down, this is like a trampoline, like a slingshot of pressure coming to the upside. And we see that. Now we can see right here, as soon as this broke this trend right here, it broke out, retested, launched to the upside. Similar thing is coming right now. This is just happening over and over again. it broke out. Now it's trying to test higher. Now we're looking at XRP. This is kind of looking similar to AVA, Filecoin in that regard, but this is broken out and it's consolidating with a lot of this uncertainty with what's going on in the market. So all that to be said, be patient. Let the setups come to you. You know what? Right before, let's actually do optimism real quick. Excuse me, man, these allergies. OP, are you down with OPP? Yeah, you know me. I'm down with OPP. All right, so here we go. Auto, we are on let's go 12 hour. It's not going to be a lot of history on this, but this is looking a little bit like a triple top. But we are consolidating, and I will say that this will probably lean more into what the narrative of the market is. So although this might have structures, this does have strong partnerships. You know, they just did a partnership with Coinbase. We're seeing bearishness dominate this narrative though. So is it suppression? Is there a little bit of market suppression here? I don't know, but this is flipped back red. We're getting bearish divergence, but this is kind of nullified or contradictory sort of, this is bearishness, but the bearishness is unhealthy. It's showing here. So now let's go to the 2 hour. On the 2 hour, we are looking, I mean, we're trading in a range, option J. And so until we kind of break above this range, I would be a little cautious on optimism, but this is a longer term play that I would, that is a very interesting play, especially with their partnership with Coinbase. So shout out for that. And then the last one we will do is Caspa. This one I've been hearing about it a lot lately, and I'd never heard of it before. I mean, this is, it's harder to trade these. It's price discovery, but we could see right here, if we zoom in, let's minimize this. We could see right here, we've got a bit of a bull flag option, falling wedge, bull flag, whatever you want to call it, structure. And we are on breakout. So I would be watching this level right here, the previous high. And also option, if we zoom into this, option F gives you your Fibonacci. You can do that from the top to the bottom. Now, see, this is a cautious point right here. If we're able to clear this level, which is about 37.6, 37 cents, this is the golden pocket. Then potentially you could be looking at option T, this whole bull flag, potentially a target up here. Look at that, right? That target from the bull flag right at the 3.618, which would be about 8 cents. So there's a lot of bullishness here, but I would just urge caution, because look at this relative extrema. Look at this. Look how far outside of this. So there is a little bit of caution here. I wouldn't trade something just because it looks bullish. There could be some underlying bearishness. So with that being said, I love you all. I appreciate you. Hit that like button, hit that subscribe button, ding that bell. And if you have not yet, before you leave, and even if you watch this later, make sure you come over to the BitLab Academy page, retweet this tweet. The @Academy BitLab is the Twitter, and retweet this tweet. You get entered to win a bunch of stuff. We do it every Friday. We draw from those that retweet these and help spread the love in this community. So on your way out, hit that like button, hit that subscribe button, ding that bell, and I will see you all in the next episode. Have a wonderful day, everybody, and make sure you come over to the BitLab Academy YouTube page and watch Saturday's stream. It is amazing stream, and I'll leave you with that. Have a wonderful day, and I'll see you later. Adios, muchachos.